You've heard this investing advice countless times. Don't put all your eggs in one basket. So you diversify. But diversifying your investments is more than just buying a few different stocks and then putting it in different places, right? What you want to do is build a portfolio that mixes different asset classes to manage risk for the long term. You build resilience. So how do we do this? Without needing a huge amount of capital or becoming a financial expert overnight. I know I'm not. I'm Andrea Heng, and I'm going to try and spell out each practical step on the Money Talks podcast today that you can take to build your own proper diversified portfolio. But I'm not going to do it on my own. I have with me Jeik Sohn, Head of Client Group for Southeast Asia at global investment firm Capital Group. Hey, welcome to the hot seat, Jeik.
Yeah, thank you for having me. I'm really excited.
Okay, so let's take you back to that first line that I gave to the camera, right? A lot of us are familiar with that concept. Don't put all your eggs in one basket, especially when it comes to investing. But today's environment is a real shaky one, though. So there are some baskets that we want to try and avoid, right? So what does having multiple baskets look like today? How diversified do we really need to be?
Yeah, I think the short answer is yes, we need to be diversified. And, you made an interesting point, today's a shaky world, but actually the world's been shaky for, today as well as last year, as 10 years ago, 50 years ago. So the world's always a bit of a volatile, kind of uncertain, shaky period. So I think that's a constant that we need to be kind of, comfortable with.
Sure.
So, what does true diversification mean? You also mentioned before, does having, multiple stocks count as diversification? Unfortunately, it doesn't, right? It's not just about the pure number. You have to think about the different sources of risk. So, just for example, by company, right? Holding one company versus 100, if it goes bust, it's a difference between your whole portfolio going to zero or just 1% going to zero, which is manageable, right? But you have to think about asset classes you mentioned before, fixed income, equity, holding some cash is good, maybe some gold, doing really well these days, but also by country, right? Everyone has a home bias. If you're an American, you have a bias towards the US.
Yeah.
Singapore, you kind of feel like you trust some of the Singaporean blue chip stocks, right? So that's always there, but you have to diversify across country as well. And if you want to go a little bit more kind of nuanced, investment style.
Okay.
Right. So these days, kind of the more growthy, kind of a bit more innovative companies have been very popular, especially with technology and innovation and AI really driving the global economy. But do you want to have your entire portfolio there, or actually the world is a bit diversifying now? The market's rotating a little bit. It's not just about the Mag 7 anymore. So investment style is another one.
Right.
And then maybe the last one I'll kind of mention is by provider.
Okay.
Right. So I work for an asset management company. It's a company I know, a company that I trust. But would I recommend that people put all of their eggs with one company? You should diversify by company as well.
Right.
So
Okay,
it's
that's a new
multiple
one
kinds
for
of
me.
sources of risk.
Okay, that's interesting. That's a new one for me. So by company, by country markets, by style as well.
Yeah.
Those are the three concepts. Okay, so let's zero in on the Singaporean now. We are notoriously reputable for being good at saving money. But when it comes to investing globally, there's often a hesitation. There's a huge reluctance when it comes to investing in global stocks or just having a global portfolio. What do you think is the biggest factor that's holding us back? And is it really such a bad thing if we just want to stay in home turf?
I think it also depends on where you are in your home. This is Channel News Asia, so it's not just Singapore, although Singapore is an important part. But let's take some of the Southeast Asian markets. Some of the stock markets have been flat for 10, 15 years. If you have a home bias where most of your assets are invested locally, you haven't really made a lot of money. And so I think it really depends on the context. Likewise, if you think about the US, it's recently been one of the world's strongest stock markets. Or you think about Korea, where I'm from. One of the best performing stock markets this year, up 65%.
It is, yeah.
And so I think that context is different. But in general, if I had to make a sweeping statement, it's better to go global because you get more diversification instead of putting all your eggs into your home country.
Yeah.
Great home country, you're kind of living and breathing the economy. So
Yeah.
why not diversify a little bit?
Yeah, because plus you never know, right? We saw that in COVID as well, where you saw a lot more retail investors venturing outside the pond of familiarity in a way. Some investors wonder how to balance then home ground familiarity with global opportunity. What's a good rule of thumb for balancing local and global buys in your portfolio?
Yeah, it's a good question, and this is why we're an asset manager. We don't go direct to the end investor. This is why having a financial advisor or someone that you can ask these kind of questions to is really important, because if you're a 20-year-old who's really comfortable going global versus a 60-year-old who's a bit more conservative,
Right.
the portfolio is going to look very different. So I don't have a magic number, but I would just say to really be diversified. And what does that mean? I think it's more in the ballpark of, let's say, 10, 20% home market versus 80%, to give you
Yeah.
kind of a bit of a
Right.
indication.
And you can always sort of manage that later on. You can make tweaks to it, adjust as you get older, as you reach certain milestones in your life, and depending on your income as well, right?
Yeah, no, exactly. And so I think, going back to like diversifying, core satellite is a good way. I mean, might be a topic that has been come up in the past in podcasts. Core is the big building blocks of portfolio. It should represent the majority of your assets. These should not be very specific, narrow themes or countries
Right.
or parts of the market. These should be broad, diversified, global. And then you can have your, home bias kind of thematic,
Right.
satellite.
Or any kind of bias.
Yeah, exactly. Or in technology, again, AI is a really big boom right now. We believe this is a major multi-year, very long-term secular trend that can be a satellite, of course, as well.
Right.
And I was just thinking about, analogies. So I feel like there's a second wave of Korean restaurants just kind of popping up everywhere across Singapore.
There is. And you know what? I blame the advent of Blackpink, BTS, and K-pop Demon Hunters.
Yes.
It's really quite a global phenomenon.
It is. It's everywhere.
Yeah.
And so anyone that has had Korean food knows that, those little side dishes that you get?
Banchan?
Banchan. Okay,
Yes.
you even know the word.
Of course I do. I'm a foodie.
Okay, yes. We all love the makan, right? So
Yeah.
you have the side dishes. The noob mistake is when that comes, is to just eat all of the side dishes. Right? It's
I'm not a
tempting.
noob. I still make that
You still
mistake.
make that, okay. It's tempting. And I
Right.
know, you're hungry, you wanted to dig in.
Yeah.
But have patience and wait for the mains, right? The stews, the grilled fish, the
Yeah.
grilled barbecue meats,
Yeah.
all of these things, and have a balanced meal. That's the way to think about it. Focus on the core building blocks, the mains, and then have a little bit of side dishes to complement.
That's a way to look at it. Yeah. I'm also suddenly reminded of I think it's called Riefenstahl, where it's a Dutch concept of having rice with multiple dishes laid out, and then you kind of take your pick. So your rice is your constant, and then you take and pick which dishes you want to eat. And it's very similar to nasi padang.
Yes,
That kind of stuff, right? Yong
Yeah.
tau fu is another concept as
Pick
well,
and
apparently.
choose and make a meal out of it. Yes.
Okay, I'll think about that when I see banchan the next time. Okay, so when diversifying investments, what tends to be the biggest misconception that people have?
The biggest misconception. Okay, so I was talking to my colleague just coincidentally a couple of weeks ago, and we were at a dinner. He was like, oh, we're just talking about personal finance, right? And he said, oh, I have kind of 50 stocks in my portfolio, invest in some other funds and ETFs. But, he didn't really have a good time.
Okay.
And I was kind of, probing a little bit more, and 50 stocks seems, relatively diversified.
Yeah.
Unfortunately, he was all kind of concentrated in technology, right? Which is done well, but also, there's been a little bit of, it's not the Mag 7 anymore.
Yeah.
It's very disparate now. Some of the
Yes.
Mag 7 has been performing well and some aren't this year.
Correct, yeah.
And so that was his problem. Is like he thought he was diversified, 50 stocks, but actually he was really concentrated in one area.
Right.
And so I think that's one misconception. It's not just about the number. It's kind of what we said, have different baskets, not the same basket, or baskets that look different,
Yeah.
but actually it's the same basket.
Exactly. Or baskets that have those dividers inside, but it's essentially the same
It's the
basket
same basket.
still. Yeah.
I mean, a good example is just thinking about kind of focus on China and Asia a few years ago, before China really started, the stock market started to slide. I had clients really interested in Chinese equities, Asia high yield. That
Yeah.
was a big kind of trend at one point. The property developers
Yeah.
giving you really attractive
China
low
EVs
double-digit yield.
also.
China EVs.
Yeah.
Unfortunately, if you loaded your portfolio all there, it's all about China, the China consumer, luxury goods as well. If you want to, add that in there, it's all the same source of risk. So again, you think you're diversified, but actually you have to look at the underlying first principles of what you're actually exposed to.
I think you need to think about risk in a way in which a domino effect can take place. So in the example that you gave with China, with the Chinese economy not doing so well or having a very slow recovery, it plunged first and then it recovered. You have to think about it as a domino effect, right? If you're all in China, then that's everything that happens in one aspect of the Chinese economy is going to have knock-on effects.
Exactly, yeah.
And you have to try and minimize that. I don't say avoid it. I would say minimize that.
Yeah.
Here's the thing. There's something that I heard from the ground about how currency is a factor when it comes to their portfolio. So the strong Sing dollar, it has its benefits, but there are concerns that the strong Singapore dollar could sort of cap any gains that people have from their investments due to currency fluctuations. I mean, is a diversified portfolio one of the ways to sort of guard against that?
Yeah, I mean, we didn't talk about currency risk, but that's a good point, especially if you're investing globally, especially if you're investing in emerging markets, where currency volatility is a bit more kind of pronounced than the US dollar. So, yeah, you're right. Just like any other sources of risk, you have to diversify against that. And so one thing I would say is that you can't really predict which currency is going to strengthen.
That's
it's
true.
one of the most notoriously difficult things to predict.
I mean, look at the Malaysian ringgit this year. And
who would have predicted that?
Exactly.
It's been really strong, right? And Vietnamese dong has been weak. Korean won has been a little bit weak. And so it's really hard to predict. People have been talking about the downfall of the dollar for a long time.
Yeah.
Right? And it's been weak this year. And I think that's, probably right in the short term. It was very overvalued. Not to get into any deep investment topics, but just like any other source of risk, it's about diversification. Don't have only one single kind of currency exposure, the euro or the US dollar.
Right.
Just be diversified.
Right. So you can have sort of a portfolio that's built upon Sing dollar investments, euro denominated investments, and USD denominated investments as well. And that's what you're saying, right? To have those different baskets as well in terms of the currency risk.
Yeah, exactly.
Okay.
And this year, emerging markets, have been out of favor for as long as I can remember, I think 15 years, since the GFC almost, and the dollar has been really strong. And so are we seeing a bit of reversal? Probably.
Yeah.
It seems to be a bit of a durable trend. And so, just being diversified.
Yeah, it's really nice. And especially we're talking about this as the ASEAN Summit is coming to a close and there's a lot of excitement brewing in this region. If you're talking about EMs, emerging markets specifically. There's another one that I want to throw at you here, Jake.
Sure.
Some say you can only meaningfully diversify your portfolio if you have the right amount of cash, if you have a big capital outlay. Can I still build a diversified portfolio on a smaller amount of capital without getting eaten up by fees? Because I think a lot of investors also tend to forget that there are fees to pay. So you have to figure out what that comfortable figure is. Can I still build a portfolio then, a diversified portfolio on a smaller capital?
Yeah, absolutely. I think it depends on which instruments you want to use. So if you're trying to build a diversified portfolio through single stocks and bonds, that's going to be, very difficult for the average investor, let's say. Bonds have minimum kind of investment sizes and these kind of things.
Yep.
But if you think about using funds, ETFs, which have typically lower minimums, you can get, very broadly diversified very quickly.
And
with
that
low
tends
investment
to
amount.
be the appeal of ETFs in the first place also, right?
Yeah, exactly. Yeah, lower fees.
Right.
But actually, there's an advent of active ETFs. Have you heard of that?
No, tell me more.
So historically, ETFs were almost all passive, right? It just copies the market, the S&P 500, Straits Times Index. But mutual funds tended to be active.
Right.
A professional asset manager, fund manager, is going to try to pick the companies that he thinks are going to do well and avoid the ones that are not going to do well. That's active management,
Okay.
picking winners, avoiding losers.
Understood.
ETF is just a wrapper. It's a vehicle.
Okay.
And so you can put that active investment strategy into an ETF. And this is a huge boom in the US.
Right.
Yeah. And it's one of the fastest growing parts of the market. It's going to come to Europe, and I think it's going to come to Asia in due course.
It sounds like it will in a matter of time. So there's a lot of interest in high growth US tech stocks. You mentioned this at the start of the conversation as well. What would you say to an investor keen on this, right? Balancing the appeal of popular high return assets with the need for broader, more stable global exposure? How do we strike that balance?
Yeah. And I'll just go back to what you said before, which is about balance. I mean, this podcast, if you want to just end it right now, let's just say balance, and then let's just go home and have a coffee. But jokes aside, technology is exciting.
It
right?
is.
And actually investing is an education journey. And so I kind of think of it as, in also practical terms, if you invest in something that you're actually engaged with, you'll try to learn more about it. So you know what? Let's lean into, this kind of technology boom and this AI trend right now. But let's size it appropriately.
Yes.
Right? Let's not just mistakenly have it 80% of our portfolio. So again, think about the core satellite or the main dishes and the banchan. This is banchan, right? This is the kimchi, or this is the spicy raw marinated crab. You don't want to eat only that because you will have a bit of indigestion maybe later.
Yeah, although some will argue that, sometimes you got to live life that way and just only eat the marinated crab.
Yeah.
Only if you can stomach the indigestion that comes after.
Exactly. That's the key, right?
Yeah.
So it's really about the personal preference. But, this kind of goes to my point about diversification I wanted to bring up, which is diversification, there's two sides of the coin. Right? By diversifying, you're reducing the extreme volatility that you may experience. What comes with that is, dampening the returns, possibly.
Correct.
Right? So again, let's just take one company versus 100. If that company does really well and you get lucky, right? It's really hard to get predict the winners.
Yep.
You're going to make double, 3 times the money.
Sure.
Again, if it's wrong, you're going to possibly lose your entire kind of investment in the company. So if you think about like a triangle that's on its side, the cone of outcomes, it's really high or it's really low. So it's very wide.
Yeah.
Diversification tries to kind of narrow that down a little bit so that it's more narrower range of expected outcomes.
Less of a shock.
Yeah.
It's a bit of a shock absorber in a way.
Yeah,
that
exactly.
you're kind of anticipating.
It's a good metaphor. But you don't have to gamble in order to build wealth over the long term. You said that very important word in the beginning, long term. For the average person, it's, again, really hard to time markets perfectly.
Yeah.
To know which company is going to do well, to know which sectors are going to do well, to know which currencies are going to do well. And so I think it's a bit of a fool's game. And so just being diversified and just having exposure in the markets, so getting invested and then staying invested, that really is the key for the majority of investors out there.
Yeah, and I think you got to question your own values as well and translate that into how you invest. I think that because at the end of the day, you have to be comfortable with what you've done with your portfolio, right? I think you can gather by now, sitting here for the last few minutes, that here at Money Talks, we like to paint scenarios for our guests.
Yes.
Here's one for you, one more, I promise, to challenge you. So let's take a Singaporean in his 30s or her 30s, CPF sorted, owns a few Singaporean stocks. What's a tangible, non-intimidating first step that he or she can take to start diversifying their portfolio now?
Okay, so pretty young, you have let's say 30 years of working life ahead of you. And so that's kind of your investment horizon, right?
That's right,
we
essentially.
invest for a retirement ultimately.
Yeah.
So I think you have to know that there's going to be volatility. There will be a couple of big stock market crashes in your lifetime, and you have to get comfortable with that because you have to take risk in order to earn returns. So for someone that young, I would suggest to invest in a very broadly diversified core global equity fund.
Okay.
Right? Why? Because again, picking the right country, picking the right sector is extremely hard. And so you want to be diversified across all those. And so I said core specifically because of the investment style.
Right.
Not value, not extreme growth, but something in the middle that has a little bit of everything, like a flexible global equity strategy.
Right.
Because you're kind of leaving it to the experts to find, which is the best company right now.
Right. To sort of calibrate it for you, right?
Exactly, yeah. And someone's doing the research to figure out, what, these growth companies getting a little bit expensive. Let me kind of sell that and let me buy some of these more dividend-paying companies, right? So you get a little bit of everything, right? Again, diversification. So I think that's a good start. It's not so intimidating because you don't have to make the decision. Someone is making that decision for you.
Okay,
right?
That's a good tip.
So I think that's one suggestion.
Okay.
Maybe I'll kind of shift gears a little bit because the median age in Singapore is 44 years.
Yeah.
Right? So it's a little bit more advanced. So what do you do with that? Then I would say go for like a balanced fund.
Okay.
Right? So a balanced fund means exactly that. It's a little bit of equities and a little bit of fixed income. So 60-40 is the usual multi-asset fund that's kind of quoted.
Right.
60% equities, 40% fixed income. So your mid 40s, you still have 15, 20 years of working life. It's still pretty long.
Well,
so you need
in Singapore,
equities.
maybe 25, but
Maybe 25.
but yeah, I mean, there is still a substantial runway still. Yeah.
So you need to grow your capital still. But maybe you're, again, you said a new investor, CPF started a few Singapore stocks. And so, again, maybe a half step is, I don't want to go full equities.
Yes.
So I'll go 60-40.
Okay.
So,
I mean, that does sound reasonable.
Yeah.
Yeah.
So, I mean, I would recommend something like that.
Okay.
So the next question, I think, I'll probably be asked is, how do I find the right fund strategy and from which company?
Yeah.
So I just narrowed the universe from thousands of options to now hundreds.
Right.
It still is choice overload.
It is. It's
right?
option paralysis at work.
Exactly. Yeah. There's a lot of academic research on this. A little bit of a side, okay? So there was this data that showed when you added more investment options to a retirement plan, the average cash holding increased.
Oh.
So basically, too much choice means I don't know what to do. You know what? Too difficult. I'm going to park it, ignore it, and then I'm just going to stay in
That
cash.
sounds just like me.
Yeah. Some of my colleagues as well. We are,
Right.
one of the largest active investment managers. And I have colleagues who are like, holding too much cash, don't know what to do.
Yeah.
Right? If we can't solve it, how is the average person going to solve it, right?
Precisely.
Yeah. So, maybe I'll just give you kind of 5 very simple tips
Sure.
to try to look for a suitable and appropriate
Okay.
fund and strategy.
Let's hear it.
I think the first has to be a long track record.
Okay.
So, past performance is not a guarantee of future returns, but you need some history,
Yes.
right? So don't pick something that's really new, right?
Okay.
That's untested.
Okay.
So a long track record. Long meaning not 3-5 years. I'm talking about decades.
Right.
The second is a good track record,
Okay.
right, of returns. Some may say, okay, I'm going to pick the best performing fund out there. That's usually what you see in these various personal finance websites.
Yeah.
Here are the top 5 best
Yeah, it's
performing
always
funds
top,
in the past
best.
year.
Yeah.
Yeah. And I kind of understand why they're doing it. It's very eye-catching. It's exciting. I mentioned 65% returns for Korea, right?
Yeah.
It's eye-catching. But the question is, what's going to happen from now on?
Exactly,
Right?
yeah.
And how are you going to predict that? It's impossible, right? But there are a few indications. So if you see the pattern of returns being extremely volatile, one year really shooting lights out, and then the next year underperforming, and you see this volatile pattern, it means they're probably taking a lot of risk. Remember that cone of outcomes?
Yep.
They're taking more risk.
Yes.
If you see a pattern where, good small wins here and
Yeah.
there, maybe, you're not
So
gonna
you're
get
looking for consistency.
consistency. Exactly.
okay.
Yeah. Well put.
Okay.
So a long track record, consistency of track record. I would say stable investment team.
Okay. What do you mean by that?
Bit of a strange one, but again,
Because how am I supposed to know?
well, you can see there should be reports here and there. And there's a lot of free websites out there that does a bit of research on and due diligence on investment products. And they will have as a pillar, the investment team.
Okay.
Right? Because if the team that delivered that 10, 20 years of returns is gone,
Right.
basically you're buying something
So
completely
you're looking
new.
for reputation at the end of the day.
Yes,
Got
exactly.
it.
Yeah.
Okay.
And maybe the fourth I would say is, you mentioned this, it's cost. Cost, I think, is a consideration.
Yeah.
Right?
Fees.
It's a hurdle, right? But I don't think people tend to just focus on, I'm going to go low cost, right? But actually you have to think about value for money.
Yes, of course. What are you going to get for that cost in return?
Yeah. So it's like a pair of shoes, right? So my motto is buy good and buy once. Right?
And it will last a long time.
Yeah, exactly. Or you buy cheap, you're going to have to replace it 3-4 times.
Precisely.
There's a lot of transaction costs.
I mean, this is a conversation for fast fashion even, right? And it's turning on its own head.
Yeah. I'm not super fashionable, so I'm not the suitable target. But,
Yeah.
that's a good point. Yeah.
Okay. Those are really nifty tips there. And I think it really has dialed down the intimidation that people feel when it comes to learning to diversify their portfolio. I mean, this conversation really was a good reminder of why diversification isn't just about avoiding risk. It isn't just about stock picking. It's really about building a portfolio. And to build something requires trust, just as you said. And with that, I'll leave it there. Thanks so much for all of your input, Jeik. I mean, this has been really insightful. Here's hoping that the word diversification doesn't scare people anymore. Thanks so much for sitting in the hot seat today.
Yeah, thank you so much for having me, and I really enjoyed the conversation.
Likewise. Hey, Money Talks community, this one's for you. If you've you've got any comments or questions, you can always leave us a message, okay? Write to us at cnapodcasts@mediacorp.com.sg. Money Talks is available on Apple Podcasts, Spotify, YouTube, and Me Listen. You know what to do when you're there. You rate us where you find us. And of course, big thanks to the team: Tiffany Ang, Net Fetalvero, Junaini Johari, Ho Pei Ning, Joanne Chan, Alison Jenner, Hanida Amin, Nurfaiz Samhari, Fadli Ahmad. I'm Andrea Heng, signing off for the Money Talks podcast. See you next time.